what do you make of this QE extension? Will it perhaps keep bond yields pretty much in check?
Yeah, hi. So currently the mood in the bond markets in India is pretty much similar to liquid oxygen, where where the bond, the GSAP or the QE equivalent, which the Reserve Bank of India has extended, will not really let the yields rise dramatically. Well, at the same time, the week-on-week supply in auctions, government auctions, will not really let the yields go down dramatically. So we are clearly looking at a very tight range as far as the bond trading is concerned. And yes, this could extend maybe for the next couple of quarters.
So having said that, when do you see the RBI embarking perhaps on the path to normalization?
If you look at the current scenario in India, and I think that is what was the underlying crux of the Monetary Policy Committee text, they are concerned about patchiness in growth. It's very sporadic. There are some high-frequency indicators which are suggesting pickup, but there are equal number of indicators which are suggesting a somber kind of a mood. So given that mixed signals, we think RBI could well do with delayed normalization. It seems too premature to consider a normalization at a time where things are still fluid on the pandemic front, though we have come a long way compared to what we were at the same time last month. So I think the normalization from the Reserve Bank of India will have to wait for some time. It doesn't look like it's anytime soon.
Lakshmi, we've got the COVID situation improving there in India. It's been a dreadful time there, of course. But Lakshmi, how does perhaps increased QE help people recover from COVID? Because, or should I say, the pandemic and its influence and its impact on the economy ultimately? Because QE, as we know, does indeed create asset bubbles. Now, those asset bubbles, of course, are perhaps therefore the more wealthy, and perhaps this, what it does is create even more inequality there. So I'm just asking a simple question: how does it help?
You're right. Is there a direct help which is being offered? The answer is no. But we need to be mindful that there is a government which is growth focused. There also has to be a central banker which has to be mindful of growth without losing the vigil on inflation. Currently, if you see, we have seen a downward revision on growth estimates from RBI, which was already conservative. We were at 10.5% assumption. That's come down to 9.5. The Q1 of FY22 for India is pretty much a washout. Now, given that if you were to hike rates or embark on the path of normalization, it would actually be counterproductive. And hence the decision probably to continue to support the bond markets till such time you don't really feel that it is actually stoking inflation. So we're not really seeing any consumer side or demand side pressures, which is slightly more lethal from an economy perspective. So discretionary spends have collapsed. And I think all that has led or emboldened the central banker to probably continue this path. It's not going to be for eternity, of course.
And of course, naturally, we've talked about how the middle classes have been shrinking because of the pandemic. This is going to make it worse, surely. And the thing being that, okay, you keep things going, but you need to have more fiscal support here, do you not? And we've got a government which is fairly silent on embarking on further stimulus there.
Absolutely. We have been reading and hearing about a potential additional borrowing program for the government of India to the tune of approximately 1.6 trillion rupees. Now that sinks in with the fact that the government will require to borrow more if they have to spend more. And intuitively, therefore, the logical extension to the GSAP or the QE equivalent for India, where the announcement for the coming quarter has been to the tune of 1.2 trillion rupees, whereas in this quarter, it's just 1.1 trillion rupees. So clearly, there is an expectation between the states and the center. There could be a lapse, but is it going to be a substantive slip? Looking at the collections on the goods and service tax, which is not really plummeted. Even for the month of May, it is north of 1 trillion rupees. It does not look like it's going to be a very lopsided equation, but slightly more balanced, with certainly possible slippages in the second half of this financial year.
Lakshmi, we've seen quite a rally for Indian stocks, but we heard from the finance minister saying that there is no bubble because fundamentals are still intact. What's your take on that?
So clearly, if you look at it from any metrics, whether you look at it from an earnings perspective, Q4 for most of the corporate India has been pretty spectacular. Some of them were neutral, but very few misses, largely hits. Even in Q1, as we have begun, as I said, there are mixed responses. Also, if you look at another metrics, which is market cap to GDP, we're not significantly out compared to some of the other nations. So given all of that and the fact that things will catch up with a lag, I think markets right now may not be too cheap, may not be very expensive, but clearly somewhere in the mid part of the neutral zone, which continues to attract flows from domestic as well as foreign institutional investors.